What is going on, investors? Back again. Time to talk about another bank stock that reported earnings today. Bank of America, ticker symbol BAC, one of the largest consumer banks here in the United States. Now, I haven't done Goldman Sachs, Citigroup, Wells Fargo, BlackRock, and a couple others. I promise I will do a complete banking recap of all the stocks that reported this week. I'll do that either tomorrow or Friday. So if I don't cover your particular bank stock in an individual video, I will do a broader recap video. But I did want to jump in here and talk about Bank of America in particular. We'll talk about some of the key financial metrics that they just reported this morning. And then finally, we'll jump over to the chart. I think we're getting dangerously close to an area where I'd love to add shares. And I actually have a decent position already in Bank of America, but if it gets a little bit closer to my price target, I will be adding to this because we are paying about a 3% dividend yield right now. We've got a $200 billion market cap. As you should know, all the bank stocks like Bank of America, all the major banks cannot raise their dividend or do any share buybacks at least through the end of the year and potentially into next year as well. So that's just something that you want to keep in mind. It will keep a lid on this stock, but eventually that will turn around. So you don't necessarily have to run out there and buy these stocks. I don't think they're going to snap back. Interest rates are not going to snap back. All that stuff is not going to come back, but these are excellent long-term performing stocks. And at the valuations we're getting them at today, I think you'll do very well over the next few years. Now, Bank of America fell off about 2% yesterday on the heels of other bank stocks reporting earnings. And then Bank of America stock fell again today by about 2% as well. So this is a really, I love it when really good performing stocks start to fall off and you can get them at much cheaper prices. So let's take a look at the valuation really quick. So the first metric we'll take a look at as we typically look at bank stocks. I'm not big on price to sales, price to earnings, this kind of stuff. If you're comparing the company to itself, I do enjoy that. Now with bank stocks, I make an exception. Price to tangible book is a good way to evaluate what kind of value you're getting with the stock because all these banks typically make their money in the same way. And if you were to liquidate the bank for whatever reason, well, you would end up with kind of a tangible book value. And so we see here that Bank of America has traded up into the 1.8, 1.9, hasn't quite got to 2 times a tangible book. I would say that's probably overvalued for most banks, but they can peak up into this 1.75, 1.8 book value. And we see today, we're sitting right at 1.25 tangible book, price to tangible book, which is a comfortable valuation. I wouldn't say it's necessarily cheap. We see earlier in this year, it got down to 1, even under 1 times tangible book. I think that's almost a back the truck up type valuation when you see that for Bank of America. Now, moving over to a price to earnings basis, we see here that, again, we're in a comfortable range. We're right at 12 times earnings, which you compare that to a tech stock or anything like that, you're getting pretty nice. Now, it has peaked up over 20. I would say that's definitely a time where you could maybe lighten the load if you want to sell the stock, but more comfortably, it trades in that 12 to 15 valuation. Now, when we see it down here closer to 10 or under 10, that's definitely nice. So I would, if Bank of America pulls back even further, it's definitely a stock that I will definitely be looking to add to. Now, let's jump into the financials. These were just released today. Don't typically look at graphs, but I think some of these really illustrate some interesting stuff that's going on. So we've got provision expenses. So what this is Bank of America and other banks set aside money just in case or when loans go bad. So auto loans, home loans, business loans, all types of loans start going bad. Customers can't pay. Obviously, we're in the environment we're in. That's definitely something that's happening a little bit more often. We see here in Q1, this was normalized kind of reserves and charge-offs, and we see here it is accelerated. So they're building reserves, although these charge-offs haven't really peaked, although we saw Jamie Dimon say yesterday that this is more than likely going to increase in 2021. We're not going to see the full effects with it here in 2020. And we see here, though, in Q3, it dropped back down to a more normalized range, and we didn't add as much provisions in terms of reserves. So that's a good sign. Now we have active consumer deferrals. These are deferments, people delaying paying on loans, things like that. And we see the balance in the light blue, and we see actually accounts in deferral. That's actually trended down, and it's actually, very comparable to the beginning of the year. And so this is a good sign as well. Then finally, we see here non-performing loans here. We actually see this is trending upwards. So you'd like to see this trend back down, but we see, take a look at the commercial sector here. We were at 1.3, 1.5. That has continued to increase, whereas you see the consumer has actually been holding relatively steady in terms of their non-performing loans. It's really that commercial sector that I think, especially in the next year, 2022, you'll see a lot of this trend continue. So that's not a great trend, but some of this other trend is actually decent. So moving into the financial results, we've got total revenue here came at $20 billion. We see the previous quarter. So what they do here is they do a quarter over quarter, Q2, Q3. So this is just, a 6-month view, trailing 6-month view. And then we've got the previous third quarter here. So here's a year over year view. So you see quarter over quarter, we're down, and also year over year, we're down a little bit. So I think that is what is putting a little bit of pressure on the stock. I think people are wondering, well, is this a trend that's going to continue? But I think, the management seem to indicate this is kind of a trough in terms of where they're going to be with this. So we've got net charge-offs. Those went down a little bit, relatively in line, up from a year ago, but in line considering what we're going through in the current environment. We see that reserve build went down like a tenfold. Okay, we were at $4 billion and we went down to $400 million, and we were essentially at zero in Q3. So we see that, yes, we're up year over year, but quarter over quarter, they built up less reserves. So the banks were probably a little proactive with this in Q2, and they let the foot off the gas a little bit in Q3. We'll see any acceleration in reserve build in Q4 would definitely be a negative aspect, I think, on these stocks. So we'll see. We'd like to see it stay around this number or get lower. So non-interest expense, we see expenses relatively in line, in fact, flat or down from last year and up just slightly from the previous period. Now, moving down to net income, I love how they highlight this for you. They want you to look at this. Up from, again, our revenue was down, but our net income was up quarter over quarter. Now, down from the previous period, and that also was probably creating a little bit of pressure on the stock as well. Now, moving on to the balance sheet here, I love these bank stocks always do things a little bit differently. Make it a little bit, if you're a novice investor, a newer investor, probably a better way to put it, sometimes a little hard to understand. So I'll try to break this down as easy as I can for you. Again, we've got a 3Q here. This is our most recent quarter. This is the previous quarter. So this is like basically 6 months ago. And then finally, we've got the previous year here. So we've got a year over year view and a quarter over quarter view here. So we see here total assets relatively flat. In fact, we're flat basically quarter over quarter, and we're up slightly year over year. So that's nice. Total loans and leases, we see here actually down quarter over quarter and down Q3 over Q3 year over year. So here's what you can broadly take away from this. Notice that total loans and leases, we're actually down quarter over quarter, and we're down just slightly year over year. What you can broadly take away from this is why I'd like to analyze the stocks, is that broadly the consumer actually isn't loaning or leasing a lot of money. It could be that the consumer doesn't want to take on more debt. It could be that the banks are more selective in terms of releasing debt out to the consumer and businesses. Both could be true, actually, because take a look at this. Here's funding and liabilities. So they got total deposits. Take a look at deposits year over year. We were at 1.4. Now we're up to 1.7. So people are putting deposits into Bank of America and less loans, or the loans are relatively flat. So what's that showing me is the consumer is still not super excited about the economic environment that we're seeing, and the banks themselves are probably not super excited to lend to just anyone and everyone like they may have been doing in the previous year or in previous economic environments. So just broadly something to think about there. Now, finally, our per share data, we've got book value per share. This is where we get down to like a tangible book. If they were to liquidate all their assets, pay off all their liabilities, we'd be at a book value here at $28. I love how these companies, they just show you right off the top. $28. That's a book value. Our tangible book is closer to $20. And so anytime you can kind of pay about this price for the stock, especially this tangible book value, that's an interesting entry point because you are paying like almost no premium for the company's assets. You're literally getting the assets dollar for what they're worth. And if things turn around, if this company is able to lend a little bit more, consumers start to borrow more money, well, look, their book of business is going to go up. So again, keep these numbers in mind. Our book value is $28 and our tangible book value is right at $23. We see here today, the stock is trading right at $23.90, call it $24 per share, but it recently has been as high as $27 and even yesterday was as high as $25. And so this stock is off quite a bit. And so I like that. We're trading under our 50-day moving average here, which is in the blue line. Our MACD is rolling over, somewhat of a negative aspect to it, but our RSI is moving to the downside as well. I drew a trend line in here as well. People ask me all the time how I draw these in. There's no a scientific way to do it. There's probably no there's probably right or wrong ways to do it, but it's something that is probably different for everybody. What I like to do is try to cross it through as many points as possible. So we had a top here, it got rejected. It slices through here, but notice it acted as resistance here. The stock wanted to hover in price around here. What you're trying to do with these lines is try to find places where buying and selling, critical points of buying and selling happen. And we see here, this line right here, it was a line in the sand for the stock for a while. Dipped down below, came up here, butts its heads. Once it broke, this is right at $23 per share. Boom, this stock went up to the upside. Came back down here, bounced on this for a while, bounced off it again, came back down here. Perfect touch again. The more times this line touches critical spots, you know it's a critical area for the stock. And we're right at, my line's right at, we'll call it $23. And again, we come back down here and it's not quite as low as our tangible book value, but it's basically right in between these two numbers. And I actually think that would be an interesting spot to go long this stock, is right in between the book value at 28 and the tangible book at 20, which is close to the $23 range. It might be a little lower, might be a little higher, depending on how you want to look at this. I probably will be a little more greedy since I already have quite a few shares of Bank of America. I probably have 30 or 40 shares of this stock already. So I'd like to see it pull back all the way into my price, and I'd like to pick it up right here at $23, or I'd probably shade over that, maybe $23.10, $23.20, just in case, because a lot of people are going to be looking at this line. Now, if it breaks this line, yes, it probably will come back down here into maybe the $20, $21 range. That's why I wouldn't be overly aggressive at this 23. This is just the first point where I would add to my Bank of America shares. Say I wanted to add 10 more. I would buy probably 2 or 3 shares at this 23 and wait and see what happens. If the stock bounces here and goes back up, that's fine. At least I got added a few shares to my portfolio. If it breaks down here closer to this tangible book value of 20, 20 and a quarter, 20 and a half, $21, that's when I'll be much more aggressive at adding maybe 4, 5, 6 shares at a time down in this area. Again, that's if I want to buy $1,000 worth of Bank of America, you can go up from there. So I like Bank of America. Again, keep in mind that all these bank stocks have to not increase their dividends, which is a negative for the stock. They cannot do buybacks, but at some point that will resume. Nobody knows for sure when it is, but when they do get the all clear sign to increase their dividends and do the buybacks, I would expect them to come in rather rapidly, as these companies have executives that want to sell shares into a buyback or collect dividends themselves as well. So there we go. That's Bank of America. Again, I will do more of the banks tomorrow or Friday. We'll recap as many as we possibly can in one video, but I wanted to bring Bank of America to you because it is getting close to a valuation where I think it could be a compelling investment, and especially because we're off about 4% today. So that's Bank of America. We'll be back again soon. Good luck with your investments.